Hello folks, it is Monday evening, about 8 o'clock West Coast time. No big moves in the markets today. Let's take a quick look, see where we're at. Gold in the monthly time frame, still in an uptrend, finishing out a continuation pattern. In the weekly time frame, this current candlestick for the current week, it's got a little bit of a bullish bias currently based on, the lower tail's a little bit longer than the upper tail. But given the backdrop, the strength in the U.S. dollar, I wouldn't call this bullish. We've got resistance immediately overhead at the 10-week moving average, and then this horizontal support and resistance zone. MACD is in bear mode on a sell signal. So last night, the U.S. dollar had pushed up above 109, and gold, you can see it here. There's yesterday's candle. We're in the daily time frame now. Yesterday's candle last night was below this horizontal support resistance level, and things were looking pretty bearish. I thought we were going to have a large down move in the precious metals today. Fortunately, we didn't. We got a stick save, this doji candlestick with the body of the candle closing within that support resistance zone. So this is the current 24-hour. This is the next candlestick. So we'll see what it does tomorrow. MACD is in bear mode on a sell signal. Silver monthly time frame sitting on support. It did drop lower overnight, and through the day we're down, what's that, 1860 something. Here in the weekly time frame, silver again sitting on several layers of support. MACD in bear mode on a sell signal. Daily time frame, we've got silver below resistance level at the upper median line extension of this Andrews pitchfork. Again, it looked really bearish last night with the dollar up and the metals down. We got a little bit of a bounce today, but pushing into resistance. MACD in bear mode on a sell signal. Mining stocks in the monthly time frame, bumping sideways just above a support level at the bottom of this upward trending channel. In the weekly time frame, we've got two bearish candlesticks currently. Last week's candle was certainly bearish, almost a gravestone doji, although the upper wick is not very long. And then currently another bearish candle getting resistance at the 50-day moving average. MACD in bear mode on a sell signal and very oversold. The mining stocks are due for a technical bounce, but without the metals moving higher, we're not likely to see that happen. Here in the daily time frame, this was Friday, big sell-off on Friday, and then a continuation lower today. Bearish candlestick today, MACD in bear mode on a sell signal. This is the dollar, excuse me, had pushed up above, let's see, what was the high there? High was 109.44. So when I looked at this chart last night, the dollar was actually up above the horizontal support resistance zone, and the metals were down. Here in the weekly time frame, we can see the current week's candle has a little bit of a bearish bias, longer upper tail than lower tail, pushing up into resistance both from the double top and the second median line extension of this Andrews pitchfork. So dealing with resistance overhead, MACD in bull mode on a buy signal, energy very elevated. So, it's not uncommon that it takes price several attempts to push through a resistance level but that is still my expectation, is that the dollar will push higher from here. In the daily time frame on the dollar, we can see this was Friday. Yes, this was Friday's candle, long bullish lower wick. Yesterday, or the market that closed today, a little bit of a bearish candlestick, longer upper wick than lower wick, but again, just dealing with resistance in this double top area. The current candle, the current session, is headed slightly higher off of this horizontal resistance level. We can't really call it a support level yet. You know, these candlesticks are playing with it as support and resistance. So can't really call this level support yet. But MACD in bull mode on a buy signal, histogram suggesting that momentum is slackened some. So energy very elevated. Let's keep going. This chart is on JS Mindset, I think from 2 days ago. This is the price of energy in Europe. So the first two lines are electricity, this is natural gas, and then coal. And so, you know, it doesn't matter which type of energy you want to talk about. Energy prices in Europe have risen dramatically. The EU zone is in a world of hurt on energy costs, which of course is going to affect their entire economy. Excuse me. And would expect that would also affect their currency. And so, you know, when we look at a chart like this and think about, okay, what are the economic fundamentals in Europe and what's that going to do to the euro? Well, I would expect the euro to weaken, you know, without some positive catalyst, which would have to be a resolution of the energy situation or some dramatic change in the Russian SMO in Ukraine. And neither no expectations that either one of those are going to happen. Let's keep rolling. The debt markets. This is the yield on the 1-year bill. We're in the monthly time frame, and it keeps pushing higher. You know, I moved this box up so it encompasses this current candlestick, but it keeps poking its head up above the box. The natural trend in interest rates is higher, and that's because there are no natural buyers for interest rates at this point. Without the central banks buying debt instruments, interest rates would be headed dramatically higher. And so anyway, that's the natural trend in interest rates is higher. Here we see it in the yield on the 10-year note. And again, bumping higher, has moved above the 40-week moving average. You can see in the current session, we've got a gap higher and trying to break above these prior highs, minor highs from these last, you know, that was Friday and Thursday. So obviously finding support on this. This is the lower median line extension of a shift pitchfork acting as support. MACD in bull mode on a buy signal. So yield on the 10-year headed higher. Same story. This is the yield on the 30-year in the weekly time frame. It is headed higher as well. This looks like a trading range, sideways consolidation, high consolidation. Same thing that we saw in the monthly gold chart. We get a big up leg, and then, you know, trees don't grow to the sky, and so price has to consolidate. You know, it can do a big pullback and then head higher, or it can do a sideways consolidation and then head higher. And so anyway, my expectation is that this is a sideways consolidation before interest rates on the 30-year head higher from here. Let's keep rolling. This is Bitcoin in the daily time frame. Sideways this week, just kind of bumping sideways after this drop on Friday. 2 weeks in a row. So that was a 9% drop. That was a 5% drop. And now sideways bumping this week so far. Equity markets, wasn't sure what to expect today after the big down move on Friday. What we got was a doji candlestick. If you think about the markets as a battle zone between the bulls and the bears, when you see a doji candlestick, especially one like this where the body's almost in the middle, it's like the bulls and the bears got together and they had their big battle, and neither side was able or willing to push price in one direction or the other, and so they finished kind of at a stalemate in the middle. And so can't really call this a bullish or bearish candlestick. It's just kind of hanging there. Of course, it's hanging below multiple layers of overhead resistance. We've got 2 median lines and then a support resistance zone. Looks like the 50-day moving average acted as support, or could act as support. It's just a little bit lower from where we're at. MACD is in bull mode, but on a sell signal, MACD momentum looks like it is accelerating to the downside based on the histogram. Energy is very low. So, all in all, equities in the daily time frame certainly don't look bullish. I'm starting to see some articles suggesting that earnings are not going to be good, and that will be a further catalyst for lower moves in the equity markets. Here we've got the Dow in the daily sitting on support at the 50-day moving average and support at the upper median line extension of the shift pitchfork. But right in the middle of this horizontal support and resistance level. MACD in bull mode on a sell signal, energy very low. So again, overall, somewhat bearish picture, but also could, we could get a technical bounce from this level with just about any kind of positive catalyst. NASDAQ in the daily, same thing, bulls and the bears duking it out. Very little range in this price bar, sitting on support at the 50-day moving average. MACD on a sell signal in bull mode. Let's see, this is Brent oil in the monthly time frame. This monthly candle, which, we've got 2 more days before it closes out, is turning into a very bullish candlestick. This is a morning star doji, when you have a big long bar or wick with the body at the very top. That's the morning star. That's a very bullish candlestick. And of course, expectation that oil prices will head higher as we head into winter. And then we've got the news today. We've got Iraq evidently in some kind of offensive going on. Potentially, we had some people flown out of the U.S. Embassy today. Incoming fire of some kind, whether it's shelling or not, missiles, don't know, in towards the U.S. Embassy and the defense, air defense firing. It's not Sea Whiz, but it's that type of anti-missile defense firing out from the U.S. Embassy in Iraq. And then word that there has been, depends on whether you listen to pro-Ukrainian or pro-Russian news, who launched the counteroffensive and who's winning. But evidently there is elevated activity in the Kherson region today in Ukraine. That's all I got for us today, folks. I will talk to you soon.